प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Festive cheer on D Street on the first day of Navratra. Sensex and Nifty both recover from Wednesday's fall. Auto, IT, realty sectors lead the rally. Titan becomes the second Tata Group company to hit a 2 trillion market cap. Reports a rebound in jewellery demand after a COVID low. Reliance Retail to launch 7-Eleven convenience stores in India. First store in Mumbai's Andheri East area. UAE's DP World planning to invest $4 billion in India. We get you an exclusive conversation with Group Chairman Sultan Ahmed bin Sulayem later on the show. Stocks get a global bump as Sensex surges over 450 points in trade today. Nifty ending near the 17,770 mark. All sectors seeing buying, led by realty, media and auto. Names like Tata Motors, M&M, Maruti among some of the top 5 Nifty gainers, while ONGC, Dr. Reddy's, Coal India and Divi's Labs saw some profit booking. All sectors ended in the green except for oil and gas. Titan hitting a record high after the company reported strong recovery in demand in the second quarter. Sharp rally and stock price has seen the market cap of Titan crossing the 2 trillion mark. It's 2 trillion rupees. Company's jewellery business grew by 78% on a year-on-year basis in July to September and added 13 stores during the quarter. Watches and the wearable segment registered 73% growth. The eyewear business was up 74%. The company said their sales are back to pre-COVID levels and almost all stores are now operational. Tata Motors hits a 3-year high after brokerage firm Morgan Stanley upgraded the stock to overweight. The brokerage firm also raised its target price to 448 from 298 rupees per share. Morgan Stanley believes that incremental upside is expected from the company's Indian business. The company has been more of a JLR global luxury play, but now the upside surprise is likely to come from its Indian business. They expect that to be a beneficiary of high operating and financial leverage. Ace investor Rakesh Jhunjhunwala has been bullish on Tata Group stocks for a long time. After Titan hit a record high, Rakesh Jhunjhunwala's net worth today witnessed a huge jump within a few minutes. His asset grew by 900 crore rupees today. Here are Rakesh Jhunjhunwala's view on Tata Motors as well and how he's been bullish on the company's business in the Indian market as well as other developing markets.
One of my largest investments is Tata Motors. And Tata Motors is going to lead the electrical markets, not only in India but in the developing world. That is my judgment. I don't think beyond that. That Tata Motors is already leading and will lead the electrical vehicle market in India. And if God wishes, not only in India but in the developing world. So they will make affordable electrical cars. And the cars that they have made, you test drive the Nexon and the Tiago, the electrical, is getting affordable. And I'm an interested party. Please take everything I say with a pinch of salt. But that's my judgment. And one of the largest investments of my life is Tata Motors, which I've done in the last 15 months.
Reliance Retail will enter the neighborhood grocery store space after sealing a deal with the 7-Eleven Group of America. The first 7-Eleven store in India will open this Saturday in Andheri East in Mumbai. This will be followed by a rapid rollout in key Greater Mumbai neighborhoods and commercial areas. With this launch, Reliance Retail becomes the country's largest retailer. Earlier this week, Future Retail had ended its deal to launch the 7-Eleven brand in India. UAE's Lulu Group has announced it will invest a massive 20,000 crore rupees in India in the next 2 years. Talking to Business Today TV's Rahul Srivastava during the inauguration ceremony of the Dubai Expo, company chairman Yusuf Alima said the investments would generate 50,000 jobs. The Lulu International Group is a $7.4 billion retail major with presence in 22 countries, including India.
I'm joined by India's one of the most successful NRI stories in the world, Mr. Yusuf Ali, MD and Chairman of Lulu Group. Sir, a big moment for you, this India Pavilion and India's participation.
Yes. See, we are all proud that India participated very high level in this Expo 2020. We NRIs are honored and very happy because before we were very big problems for non-resident Indians to invest in India. But Narendra Modi ji came, he declared that NRI investment is treated as domestic investment. So हम लोग को कोई तकलीफ नहीं है. पहले 100 क्वेश्चन था, 100 आंसर था और बहुत सारा regulations था. All regulations is removed.
This time, Mr. Minister Piyush Goyal has removed 23,000 compliances.
Yes. And also under dynamic leadership of Prime Minister, all the ministers are working hard for a new India.
How are you depicting it, showing it that your investment is going to go up in India now?
Yes, now we are constructing bigger shopping malls in Lucknow and Trivandrum, and we already constructed India's biggest shopping mall in Cochin, and also bigger convention center in Cochin, 10,000 people convention center. And we are also going to north in different places we identified.
Total money investment?
About 20,000 crore, 3 to 5 years we are thinking to invest in India, and also generate employment of 50,000. Because each shopping mall now in Cochin, about 3,500 to 4,000 people working. So this 3 shopping mall only about 12,000 to 15,000 people. And we want to give employment to our future generation. It is not only the responsibility of government, responsibility of our bureaucrats. It is the responsibility of government and responsibility of our officers, responsibility of business people. We will work together to bring a new India and also give opportunity to our young generation. And we will give more employment in the IT sector to our girls who is coming, is educated.
Thank you very much. Thank you very much.
Thank you.
One of the biggest port operators in the world, Dubai's DP World, has expressed interest in picking up disinvested assets in India. Talking to Business Today TV in Dubai, Sultan Ahmed bin Sulayem, group chairman of the company, said he was looking at investing up to $4 billion in India.
Kind of investments that you're looking to put in the Indian market in the next few years. Also, the government's big drive on disinvestment is going on, where they are putting some assets out for sale. Will DP be interested in picking up, for example, Shipping Corporation of India?
Well, I'm not going to say in particular Shipping Corporation, but I'm saying we are interested in privatization of infrastructure assets that relate to cargo. We are interested in expanding our ports. We're interested in industrial parks. We know how important India as a growth.
Sir,
and that's very important for us.
You already have a port on the western coast of India. Are you looking something on the eastern coast?
As the chairman said, our interest in India is across the entire supply chain. We have invested already more than $1 billion in the last 2 years, and we will remain keenly interested in participating in supply chain infrastructure.
Can you give a figure in terms of what kind of investments can come in the potential of how many $1 billion?
Well, you see, it's over the period of time. It could
Yes.
it could be twice the amount that I mentioned.
So
we have already done.
every time when you look at a business or an opportunity,
Yes.
you do a worldwide assessment.
Yes.
And when you do a worldwide assessment, you pick and choose that this is better than that. In that, what you think that India needs to do more, it has reformed and opened up, needs to do more to be as attractive as any other competing country in the world?
I think India is an attractive destination because of its market. The reform process that has been initiated could have been a bit faster, but extremely encouraging. And being a democracy, it does take time. in terms of potential, we believe India is one of the highest potential countries in the world.
So what about some bottlenecks to be removed immediately?
I mean, bureaucracy, delayed decisions, this is something which people face. But because we've been in India, we're not in New India, we understand that. But the good thing about India, it is a country where once they decide, it's done. And that is something that attracts us a lot in India.
What kind of discussion you had with the Commerce Minister? What assurances he gave you on your investments in India?
You know, we discussed our interests in privatization, in new businesses, in industrial parks, in logistic parks, and we are very keen on that. And the minister encouraged us.
Sir, what about Prime Minister Narendra Modi has worked hard on getting this new India, regional India. What kind of thing that you feel that this can do, that this your company can work wonderfully?
Well, as a company, you know, we're not only in India, we're in part of the world. So what we do always is with our synergy with our port, we can increase the export of India. And this is in line with Prime Minister Modi on the Made in India. This is very important.
The fourth meeting of RBI's Monetary Policy Committee this year started Wednesday and concludes on Friday. The committee, which will announce its decision on October 8th, is expected to continue with the accommodative stance, reduce surplus liquidity and leave the repo rate unchanged at 4% to support recovery in the economy. There is also no change expected in the projections for GDP and inflation in the current fiscal. The RBI's projection for GDP growth stands at 9.5%. Consumer price index or retail inflation is forecast by the RBI to be around 5.7% in 21-22.
The RBI's Monetary Policy Committee, which will be announcing its decision on Friday, is expected to keep the repo rate unchanged at 4%. There is also no change expected on the GDP and the inflation front. The RBI has projected a GDP of 9.5% and inflation of 5.7% in the current fiscal. But the market is keenly awaiting the exit from the easy money market conditions. Globally, we have seen how the US Federal Reserve has given enough signal to slow down the asset purchases and also hike the interest rate in the near future. Similarly, countries like Brazil and Mexico have hiked the interest rate on the back of inflation fear. So the two big issues before the RBI's MPC is to narrow the repo and the reverse repo band and also lower the liquidity levels. The repo and the reverse repo band has increased from 25 basis point to 65 basis point post-pandemic. And this has to go down to level of 25 basis point. Similarly, the current liquidity levels in the system are of the order of 10 lakh crore at a time when there are inflation fear. Such high level of liquidity fuels inflation.
In other corporate news today, Tata Power has stated it has enough supply and adequate backup to ensure enough supply of power in Mumbai. It stated it has diversified sources which will ensure adequate backup and generate adequate supply. Paris-based power sector company Électricité de France SA, or the EDF Group, has joined hands with NTPC, India's largest energy integrated company. They have signed a memorandum of understanding to explore potential power project development opportunities in the Middle East, Asia, Europe and Africa. Twitter-owned MoPub is being acquired by global mobile marketing software company AppLovin. With this, AppLovin will now be well positioned to enable MoPub's network of customers to grow and evolve in the rapidly changing in-app industry. Let's Venture, a leading startup investment platform, has secured seed funding of $3 million from marquee investors including Accel, Kunal Shah of Cred, Ashneer Grover of BharatPay and Anupam Mittal of Shaadi.com, among others, for a new business entity called Trika. A look at the first made in India Mercedes S-Class. The company launched the first locally assembled S-Class today with a price cut of nearly 50 to 60 lakh rupees against the imported version. The models have been on sale in India since June and now it's being imported in a completely knocked down state and assembled here in India. This saves the buyer a large chunk in import duties.
Please request Martin Schwenk to join Piyush Arora and to unveil the much-awaited Made in India, for in India, the all-new S-Class.
The Indian stock market trading close to its all-time highs, but some investors are not sure whether they should stay invested or exit from their current investments in equities and decide about their portfolio. So how smartly can one invest in quality stocks and make investment strategies is exactly what we do with Udayan on this show. So keep sending in your questions to us and we will answer a select few on TV and online. Let's begin and take some of our viewer queries now. Our first question today is from Sumit Wadhwa in New Delhi. Listen into his query.
My question to you is, what are your views on SAIL, and is this the right time to buy at current levels? Thank you.
Well, SAIL is an interesting one because while steel stocks have been in great demand, I think they've seen some correction over the past few weeks. SAIL itself in May was about 150 and now it's come down to about 115, 16 kind of levels. So I think there's been a fairly meaningful correction and pullback in most steel stocks, including SAIL. Now, SAIL's price realizations are very strong still in the Indian market, and realizations are good. The margin profile has improved significantly over the last 1 year, and they're even making some strides in cleaning up their balance sheet, which was not a great balance sheet at all, but they have paid back some of that debt. So I would say that SAIL is probably an interesting case. I know it's easy to say that Tata Steel and JSW Steel are better companies to invest in, but SAIL's valuations are quite appealing because if you believe that steel is in a good upcycle for the next few years, then from the kind of valuations that SAIL is trading at, returns could be quite good. And SAIL has an advantage which a lot of the other private sector steel companies do not have, which is a very high dividend yield. Because of the payout ratio to the government, SAIL might go on to pay about 10 rupees of dividend this year, which on its current price of 115, 120 works out to almost an 8% dividend yield. I mean, that's one of the highest dividend yields in the market. So once you put the valuations, the steel price expectation and the dividend yield in perspective, I think it's probably an interesting proposition to look at SAIL as a stock. This is not a recommendation to buy the stock at all, but just an assessment, since you asked of where SAIL stands in the basket of steel stocks.
Okay, another interesting question from Prabhat Raichand in Gurugram. He wants to know more about Eicher Motors. And of course, that's a stock that's been very much in the news, but has its potential topped out? Let's listen into Prabhat's question.
My question to you is, what is your view on Eicher Motors? Is it right time to invest? Please suggest. Thank you.
Well, Eicher's been stuck in a bit of a trading range of between, say, 2,400 and 3,000. And it's finding it difficult to break out of that 3,000 ceiling because every time it gets there, valuations tend to become rich at nearly close to 28, 30 times. Beyond that, Eicher is really stretching it on the valuation chart. Now, the good news about Eicher is that they've recently launched the 350 Classic, the Bullet, and the reception for that seems to be quite good. And this is such an important part of Eicher's revenues going forward, the 350 Classic, which is their bread and butter model. If that really fires and takes a hold in the market, then I think Eicher could rediscover some of its lost glory from a stock point of view. However, the key thing to keep in mind is that they're facing some supply issues. They've had a chip shortage, they've had plant shutdowns, and often the waiting period for some of these models tends to be 2-3 months plus, and that slows down their revenue stream quite significantly. So if Eicher is able to get the 350 Classic entrenched into the market and it can handle some of its supply issues, I think it could trade closer to the 3,000 mark. But given where valuations are, and given the fact, and this is important, that most of its challengers like Honda and Bajaj are actually trying to play the premiumization theme in the motorcycle market. They are also trying to launch more premium bikes because that's where the real moolah is. So I think you should be a bit watchful about both competitive pressures and the supply side issues for Eicher. And I think for all these reasons, iShares might struggle to stay significantly above the 3,000 mark. So my view is that it will probably continue to be a range-bound stock unless the 350 Classic becomes a roaring success, and then it can break out of that range.
Okay, Romir Bapat from Ahmedabad has a query as well. Let's listen into this.
Is this the right time to invest in domestic hospitality stocks like Chalet TIH, part of one of the ACE investors' Big Bulls portfolio too? Should we be bullish, go for long-term delivery, or only for intraday as of now, considering fears of the third wave?
Well, I can't guide you about intraday trading. I know nothing about it. But I think hotels are bouncing back as a sector because they've had such a bad run over the last 1.5 years. The signs are that the worst is over, fingers crossed, and they're probably back to business, because you can see that the leisure part of the business has clearly recovered quite smartly. Corporate is slowly getting back. The part which is not firing yet, and I might actually have to wait for a while longer, is international hospitality, because international travelers have still not started coming, and that's an important part of Indian hotels business as well. So business is better, it is improving, it may continue to improve. But I'm not a great fan of the hospitality sector. You can play this as a rebound trade. I mean, people are talking about revenge tourism, and some part of that is true. So you could have a rebound in some of these hospitality, even luggage kind of names, as the fear of COVID recedes. But once you've played that rebound trade, I think from a long-term perspective, it may be better not to look at sectors like hospitality and even the leaders like Indian hotels, because they are intrinsically, I feel, they're single-digit ROE businesses. They don't make great return on equity. If you don't make great return on equity, usually you will not create a lot of shareholder value. And that's been the experience for even the top stock in that sector, Indian hotels, for the last 10 years. It's had rallies, but it's never been a huge and sustainable wealth creator. So I remain quite conservative about the hotel sector as such.
Is this the last when it comes to the fears around the third wave? That's at least what the sector is hoping for. Now, last question of the day is from Prasad Padmanubhani of, from Hyderabad on CDSL. Let's listen into this.
I'm holding 200 shares of CDSL purchased at 500 rupees. I want to know whether I can hold it for some more time or book profit.
Well, it's a great price that you got in at, and you've made such a lot of money on CDSL, as most CDSL investors have. And I can understand why you're asking about profit taking, because the stock has had such a phenomenal run. It's gone up 3 times plus over the last 1 year or so. And it's a very good story. I mean, it's a wonderful way to play growing retail participation in the stock market. And we are seeing strong signs that this trend is only getting accentuated. So CDSL is per se a good story. What I also like about it is that it has an incredibly good margin profile. I mean, they make 60% EBITDA margin consistently, and I don't think there are too many businesses which operate at that level of margins. And therefore, they have a return on equity of 23-24%. I think it's a steady 20% plus kind of a compounder year after year. So there are many things going for it. The problem is that because of the three-time rally over the last 1 year, it's trading at more than 50 times 2023. That makes it expensive. Because I think, at least at a sentiment level, there should be an element of cyclicality in CDSL tied as it is to the stock market. And to give it 50-55 P multiple, I think is very rich. So I can't take a profit-taking call for you, but I think at 1500, 1400, those kind of levels which CDSL went up to, it's very difficult to justify the valuations. It seems more comfortable around that 950, 1000 kind of levels. So I don't know whether you should be getting out of it, because it seems like a good long-term story. But if you want to add more, I think corrections would be good, because it seems to have run up too much in terms of valuations.
Well, that's all we have time for on this edition of Ask Udayan. But if you have any queries on stocks, do WhatsApp us. The numbers on your screen, and we'll answer them. Udayan, thanks so much for taking out the time. And from all of us here, bye for now.